Alright guys, welcome back. This video will be a good one. It'll be a positive video, let's just say that. Are you guys ready? You guys ready to get some gains? Because I am. So, quick recap. For the past 2 weeks I've been saying that the market's gonna sell off, and that's pretty much what happened. Is it done? Is it over? Not yet. We're gonna look at the charts and whatnot. A lot of people are pointing at the Wall Street cheat sheet chart, and they're saying we're right about somewhere around here, probably right here, right? Well, I still don't think this is gonna exactly play out. I think we're gonna get a W type of some sort of W price action in the equities markets, because they're going to print money like it's like, you know, it grows on trees, and they'll get it back up, maybe new highs, and then a possible blow off top in the next few years. It also all depends on who wins 2020 and a few other things, and the dollar. The dollar is definitely going to determine if this actually plays out. Right now I give it a 50-50 chance. Actually, I'll give it a little more of a chance that this won't play out just yet, maybe later on. But we'll look at TA later. Right now, so it's Sunday, right? The 28th. June 28th. Futures, they're all negative. Gold's up, silver's up. Okay. And I'm getting excited right now. I'm not gonna lie. So, because I think we might get a huge move in these mining stocks, like they might explode. I know they're gonna explode sometime in the next 3 months, but we might be on the cusp of it right now. So go to my website, 20% off. I'll put the link in the description below the video for the 20% discount. You have to click apply code when you're checking out once it's in your cart, and you'll get a 20% off, which brings it to $180. And then for the private group, it's still only $10. But once these mining stocks start doing crazy moves like 10x, 20x, there's some stocks I think, I don't want to get people too excited, but let's just say if a few things happen, not a few things, if one thing happens to this one stock, it could easily do a 50 to 100x. So they just need to get approved. That's all it is. And it's looking more likely every day now. So 20% off. The education pays for itself, right? The opportunities we're looking for the people who've joined months ago, a year ago, whatever, I mean, they're up by a lot. It paid for itself, right? And then some. Could be a lot some, if you know what I mean. All right. I don't know. Should we look at some news events and then do TA? Let's do TA first, then we'll talk a little bit more about what's going on. No, you know what? I like doing the news. And all right. The milkshake theory, a lot of people have been talking about it again. I think it's already played out. The dollar's already showing some weakness. The milkshake theory can continue to play out, where the dollar sucks up more capital around the world as the demand goes up because most loans and debt is outstanding in USD. But I mean, the Fed's been printing trillions. Their balance sheet's like above 7 trillion. It's about to go to 10 before 2020 is over. And the reason they're doing that is because they know they could get away with it because of the milkshake theory. So I don't think the dollar is going to go back up above 100. I mean, if it does go back above 100 on the DXY, it'll be short-lived in my opinion, because then they'll just print more. If the euro falls, then maybe the dollar will rally in a really big way. Now, Europe, I still think is going to break apart. I just it's hard timing it, because Europe is even worse with the printing press. And I don't know how much their banks are all zombies. And the question is, how long can it just stay that way before every country in Europe wants to go their separate ways, right? I think next summer is we'll start seeing that, where all the countries are just coming out of the EU. By then, though, the dollar could be weaker, but I don't think it's going to make the dollar make new highs. I just think it's going to keep the dollar from crashing, because again, the dollar will look like, the nicest shirt in a dirty clothes hamper, right? All right. Internet stocks. Listen, these tech companies' PE ratios are like beyond NASDAQ bubble territory at this point. I'll talk more about that, because ad revenue is just dropping for them because of companies pulling out and protesting, whatever. Not just that, it's really overextended on the chart-wise technical analysis side. We'll take a look at that. Before I do though, I need to get this out of the way. First of all, not financial advice. These are just my opinions. I could be completely wrong. I'm not a licensed financial advisor. Consult your licensed financial advisor before doing anything. Stocks, bonds, anything extremely volatile, extremely risky. Have emotions out, stops in place. No, do not trade options or leverage up or trade leverage anything if you don't have, like, seriously, like 6-7 years experience and you've been making money, right? And you have a lot of money and you have money that you could totally afford to lose, because after 6-7 years you're playing with house money. It's not, you don't need it, right? So keep that in mind, and everyone's situation is different. Unfortunately, we're coming into extremely hard times. I understand that some people have lost their job. I mean, a lot of people have lost their jobs. It's really sad. And now they're trying to do the second wave thing. And I really hope people say enough is enough. I mean, I've been putting in the fight, right? I put my face on camera. I've been out there. And I've been speaking truth, right? It takes balls to do that. But everyone needs to do that. This silent majority thing, why is it silent if it's right? And that's the problem. That is the problem. People need to, I mean, your livelihoods and futures are on deck here. Your kids and grandkids' future, it's already screwed. And I understand why they're so radicalized at this point. And I started ranting in the newsroom about it. I'll get to that in a second. This was a really good interview. I really like this guy. He brought up great macro cyclical trends and how things are playing out. I agreed with like 90%, over 90% of what this guy was saying. I've never heard of him, but this guy gets it. That's all I have to say. You should watch that. It's in the newsroom. Links below the video in the description channel. It's free, this newsroom. There's a separate private group, right? With a private newsroom, private alerts, this and that. Alright. Quarter of all personal income in the U.S. now comes from the government, from the T. They're on the dole. So when 25% of people those people are not contributing to the growth of the economy and into the economy, because those types of jobs, they're usually negative to the economy. They take away from economic growth, right? What grows the economy are small businesses in the private sector. And they're the ones who do the innovation, they're the ones who come up with new products and services, and they're the ones who pay for everything, right? Through taxes. So this year, we probably lost 40% or more of the small businesses in the US. Globally, I don't know, but it's probably similar to it. And I've talked about this. Could be devised, right? So the big monopolies win in the end. But it's they're not going to. Nobody's gonna win in the end. That's all I have to say. Guys, I like crazy stuff's gonna happen, but nobody's gonna win. I promise you guys. Not even the super people at the top. Like they could run off to islands and this and that, but I think what's coming is gonna be so bad in the next decade that no one's gonna hide from this. So, so the secret is out. The Fed's busted. Let's take a look at this. I haven't looked at it. I just look at headlines and I kind of figure what they're saying. Sometimes I'll brush over it, then I'll post it. So the IMF agrees this disconnect between markets and the real economy raises the risk of another correction in risk asset prices. Should investors' risk appetite fade, posing a threat to recovery? Yeah. By the way, this guy's awesome on Twitter. I did listen to this. That's why I posted it. Listen, I mean, we have Davey Day Trader Global DDTG out there, and he's the perfect contrarian indicator to what's really going on. I mean, the stock market's in la la land. It's literally a bubble. And the only reason it's going up is because the Fed. They're just printing money, all liquidity is just getting injected into equities. And in the meantime, the fundamentals are just deteriorating. Just wait till Q2 earnings come out soon, and it's bad. Right now, the market's selling off prior to the Q2 earnings, and I've been saying that in the past few two videos. A lot of people are saying it's because the second wave that's coming and another wave of lockdowns, which is contributing to it. But it's the real fundamental reason is the smart investors are getting out because they know that Q2 earnings and more economic data that's going to come out in the following weeks and next month are just going to be really bad. All right. I mean, unemployment's still going up. It's still going up over 1 million every week. Well, for months on months, every week, millions of people losing their jobs, and the stock market keeps hitting new all-time highs. Not all the indices, but some. I mean, it's absolutely. I mean, it's going to be in the history books. Hopefully, I don't know who's going to write it, but future generations will probably look back on this and just say, I mean, how did they not see this? By the way, I was shopping for vehicles, and the salesperson's like, "Yeah, I just lost thousands on the market." And I'm just like, why are you even trading? Do you know what you're doing? Like, no, none of them do. It's just unreal. The amount of retail investors right now in the market. A lot of them, it's through desperation because they lost their jobs and they're still getting unemployment. They're hoping maybe they can make a living off of that. And the other reason is some people still have their jobs and got stimulus checks and they can't go to the casino. A lot of people have gambling problems, guys. And these people are now going to the stock market because it's the only place you could gamble. And they don't understand that this casino is is way more sophisticated, complicated, and you don't know. I mean, everyone pays their dues when they first start trading, first of all. Second of all, they don't understand economics and they have no idea what the hell's going on. They're just all going to lose their money, and I'm going to take it. Me and the private group, we're going to take it. It's better that we take it than the big hedge funds and institutions, all right, guys? But, if we could get the word out on some other chat groups and forums, like, Hey, hey noobs, check out the mining stocks. At least we point them in the right direction, and they'll survive and do really well, possibly. I mean, idiots could do really well in the mining sector. You just have to hold on and not try to trade the small dips and swings. I mean, I could do it, but I'm saying they can't, so they shouldn't. Um, and that's just that. A lot of the times, I'm actually trading the broader markets, like the Nasdaq, this and that. Like I've been short for 2 weeks, and my short positions are doing really good. If the market opens red tomorrow morning, I I'm gonna be looking really good, and then I'll take profits. And yeah, I do options. Well, that's because I can. That doesn't mean you should. That means if you're new to trading, you don't leverage up. You just trade without leverage. And a lot of you probably don't want to do that because you want to get rich quick. Well, everyone who gets rich quick always loses all their money. Well, they don't get rich quick. Who wants to get rich quick, right? Um, you have to pay your dues. You have to lose money, make a lot of money, have experience for a long time to be able to trade options and leverage stuff. All right, guys, I cannot stress that enough. And it's the tortoise that wins. It's not the hare. All right. The the most important thing about investing is risk management, allocation, and having a system that works over a long period of time. Because what you could do, you could get lucky and make a lot real quick, but because you don't have discipline, risk management, um, you don't know how to allocate, uh, you'll just lose it all, and maybe even end up negative if you don't know what you're doing. I highly, I'm just gonna say this: I don't short call options because your account could go negative, like we saw on Robinhood. Like you have to know what you're doing. If you buy leveraged ETFs, your account could go negative. You could end up owing money and losing it all, and then owing to the brokerage, uh, the the broker, right? Yeah. I don't like these wedges that people use, but sometimes they work out fine. He uses them. I don't like using them. They don't. But they're see. I like This is a nice channel right here on the left. These I do use. Channels work very well. Once it breaks out of the channel, down she goes, right? Once it breaks above the channel, it's a huge breakout. By the way, you could put another blue line on the bottom here and you have a giant channel. I do not like using these wedges. They usually don't work. That's my opinion. I just don't use them. Um, but sometimes I do look at other people's stuff like this, right? This article, and they do work out, right? This was a breakout from this wedge. I like using bull flags and bear flags and pennants. TAYs. Yeah, the balance sheet of the Fed is 7.1 trill. And I told you guys at the beginning of this year, before the market even sold off due to the pandemic, right? I told you guys the Fed's balance sheets can be over 10 trill, or real close, around 10 trill. All right. What else? Actually, let's finish this up. Huge dust storm coming. Godzilla dust storm. I mean, the murder hornets. Now we have. I mean, we had plagues, we had famine, and now we have dust storms. I mean, this is like apocalyptic time. I mean, I'm not afraid. Like, there's not. The only thing to fear, guys, is fear itself. All right, and we're not gonna live forever. Just enjoy every day. That's all I can say. and do your best. Because more than likely, it's not going to be the end times or anything. It'll be fine. It's just going to be hard times. Okay. Yeah, this is when I started ranting. So Bezos and Zuckerberg, their wealth, the richest people in the world are just getting richer and richer. And I can understand why there's, losers running around and toppling history. It's because they know they're screwed and they know that the boomers screwed them. And don't worry about. I mean, the boomers are gonna have the worst retirement ever. Uh, and they're reaping what they sowed because they sold out their kids, grandkids, and even great grandkids' future. And the fact that and when the Fed bails out Wall Street and these companies and the banks and everything, yeah, it stops everything from falling apart. But at the same time, it assures that millennials and any generation below them are going to be debt serfs for like the rest of their lives. And I kind of get it why they're mad, right? And they're pretty much accelerationists. They want the system to completely burn down to the ground because they don't have anything and they have no future in sight. And as listen, I'm like the oldest of the millennials, but I was raised as like a Gen Xer. Gen X is the best gener generation. They know what's going on. And the boomers, I mean, they need to they need to go. Just I it's unbelievable what they've let the world come to because they wanted an RV and vacation and cruises and a pool, right? And they just didn't care and they didn't pay attention. And now they're paying attention because now they're afraid. But deep down, they all knew what they're doing, that they're selling their kids' future. And what I'm trying to say is none of it was free market capitalism. None of it was. It was exactly the opposite. Centralization is socialism, right? So central banks, right? That's that's the disparity. They create the disparity uh, amongst everyone. To be honest, they pick the winners and losers, and they enable Western society to destroy itself essentially, and they enable less competition. They enable big gov, and they enable all of this clown world we see and we live in right now. They enabled it through unchecked fiat creation, currency creation, right? All right. What's going on? Chesapeake. I remember when I first started getting into trading and investing. Well, I first started investing when I was in high school, but trading when I started really paying attention back in like I don't know 2006 7. Chesapeake was an awesome buy back then, and that was the shale boom, right? Well, Chesapeake's going out of business, and it's funny because when they filed for bankruptcy, the Robin Hooders and the gamblers started buying it and pumping the stock, and now they just got wrecked. Um, yeah, they're trying. Listen, guys, this is political, and they're willing to sacrifice the economy just to win, just to gain power. It's all about power. It's nothing else but power, and that's what's happening right now. This isn't by chance that it's happening in 2020 during an elect season, right? So 41% of businesses on Yelp are pretty much gone bust. That's scary stuff, guys. And car prices will not drop. I Right now it's whoever's left that can finance is getting new cars, and once that's done, all these new cars. I mean, the dealerships are just you can't even park anywhere. They're just malls, empty malls, closed down malls. their lots are just full of new cars. It's just unreal. By the way, when bears capitulate and you get a short squeeze on all the shorts, and then the market does one of these, right? Shoots straight up. Here's the Dow Jones. We'll just look at that real quick as I explain this. So this is learning how to do some TA, right? That's what I have this channel for, and it's good advertising. When it shoots up like this, and then shoots a little higher, this part right here shoots a little higher, you get a huge short squeeze, and the shorts get wrecked. And then it sells off. That's how it always works, guys. Because it always goes a little higher than everyone expects, and then the shorts get short squeezed, and then you get the major correction, right? So, what is this? Give me a second. Alright, back to Tyler Durden here. And I just wanted to tell you guys that you see that a lot. You see it happen a lot, especially on rebounds. Okay. So, the auto manufacturers, I shorted one of them, the worst one out of all of them. And the short's doing pretty good. I think it's up 20%. And it's higher with, leverage and options. But the Fed's buying them because when major auto manufacturers start getting in trouble, like GM did back in 2008, it really scares the market. So the Fed's going to step in and bail out big names that everyone's aware of. I mean, everyone has cars, so everyone knows. And if they hear that any of the big auto manufacturers that are filing for 11 or 7, right? It scares the market, so they're bailing them out in a way behind the scenes. But their shares are still falling, so this is more okay. First of all, Morgan Stanley, one of the shittiest ones out there, institutions. V-shaped recovery. It's over. We're gonna get a nice pullback and correction. We're not gonna get a V-shape. What a V-shape means is it goes straight. Well, this is a V-shape, okay? This is, but it goes straight back up and makes new highs. Okay, until the Dow Jones, the S&P, could make new highs, it's not a V-shaped recovery. And the V-shaped recovery just pretty much went out the window with a second wave and then real economic data coming out, continuing to come out. That's really bad. And Q2 earnings are going to... And just wait until the market starts factoring the fact that Orange Man might not get reelected. So, again, this is what I did. This is what I talked about in my last video. I'm thinking something like this is going to happen. This is a W. Okay? W. W, if you look at my screen. A lazy W. That's what I think is going to happen. And then it's either new highs in the melt up, or maybe it actually... Well, if Orange Man, let's say, doesn't get it, I mean, at any given time, the dollar and the market could just break. We don't know when that day will come. So, I don't want to get too ahead of myself. Just so you know, when I talk about the stock market, I'm not talking about the real economy. The real economy is going to just keep getting worse over time. I'm just talking about the markets because it's completely detached from reality. Yeah, I mean, if you look at the Fed's balance sheets and money supply, all of this, it's out of this world, guys. These are hockey stick charts. I'll post this in the newsroom. Alright, what else is going on? The video's already 30 minutes. So triple threat, three major risks the markets are not pricing in yet. Let's take a look at this. 1. Sentiment remains euphoric, yet the Cove cases are resurging across the US and the world. 2. The Federal Reserve is coming under increasing public criticism. It really is. I mean, even on MSNBC, they're like starting to criticize the Fed. And that's weird. I don't know. I guess they want a correction because they never criticize the Fed. They do slightly, but it's never like up in your face. And I posted this on Twitter and in the newsroom. I'm like, they're starting to sound like me, and that's scary to me. So, 3 entities like the Fed who make up the I can't say certain words. You guys understand. Which has warned the president for years may have incentive to let the market crash this summer. Right. So that's why mainstream media is starting to criticize the Fed. They want the markets to dump right before the election. So there you go. And I even mentioned that a few weeks ago, maybe a month ago. Well, to private members I did. All right. You know what? Let's look at some TA now. So give it a second to load. I'll talk about gold and miners. Let's take a look at the dollar real quick. I know I posted in the newsroom about the dollar in more detail. It's pretty simple. I mean, we tested the 200-week moving average and bounced off of it, but it's a weak bounce. And if it falls below the 200-week, well, if it just falls below the 96 handle, right, it's no longer range bound. So this is range bound, sort of trading. I know it fell below, but ignore that for a second. This is sort of like a range. And I know it goes a little higher, but I'm telling you, if it takes out the 200-week moving average, it's in trouble. I was looking at the monthly moving average, I believe. I don't want to scroll all the way back in the newsroom to find it. Just give it a second, it needs to load. Okay, it's not loading. Anyways, I think they'll keep it above the 200-week moving average, but we're not going to see it trade up back up to 100. But you never know when it'll fall. It'll fall if the bond market blows up, basically. And then there's nowhere to run except metals, and that's when the wealth transfer happens. Everyone's money goes to like me. But I'm waiting for this to load. I just want to look at the monthly chart because I saw something interesting. By the way, the 10-year yield is down at 0.64. Very low. Very interesting. So that buys us a little more time, but alright, so here's a monthly chart of the dollar, right? It's on support right now. But so it could fall below the 96, and it's not like we're going to get hyperinflation. We're going to see more inflation, but nothing like people are freaking out yet. Like, you know, hoarding food and just going out. The 90, I believe the 90 is very important because that'll get defended as long as humanly possible. Around 91 handle. Let's just round it up. 92 handle. As long as the dollar is above that, the music keeps playing. But I feel like if it falls below that, I mean, the next stop is, and this is the DXY. DXY is a basket of all fiat currencies around the world, right? I would say, yeah, I mean, there's support next at the 80 handle. But once it falls below 92, the dollar will fall rapidly to the 80 handle, right? And this will take months to play out. So meaning this could take half a year, a couple years, right? Well, I wouldn't say a couple years. I mean, I think this will happen within the next 2 years for sure. That will go to the 80 handle in the DXY. And then they will have to defend it with everything that you have. Maybe try to raise interest rates or so. I don't know what's going to happen. But for the short term, what I'm saying for the next 6 months, we're gonna fall to the 96. Probably stay there for the rest of this summer, and then after that, in 2021, we will probably test the 92 handle, and then they'll defend it, and it might bounce around for a little bit, and then the final blow, and it'll fall to the 80 handle. When that happens, I bet gold will be over 3,000, if not around 5. And your mining stocks that are priced around $1,400 an ounce gold, well, imagine what they would be priced around 5,000 ounce gold. And 5,000, I think, in the end will be like the minimum. There's numbers out there. People float numbers like 10,000, and then they do the math and they say 40,000. I really don't know. I mean, it could technically go to infinite because fiats could infinitely get devalued, could become worth less than toilet paper. So, yeah. All right. The euro is strengthening against DXY for now. It's gonna probably go test the 1.1 and then pull back. What else do I want to talk about? That's good for now. What's next? All right, here's S&P 500. I do think it's going to at least minimum test the bottom range of this trend line and my channel. This is the channel I was talking about earlier. This is the huge channel. And it would also take you to the 38.2 fib retracement, which would test on the S&P 500, it would test 2,900. Wait, that doesn't make sense because right now it's at 3,000 on the future. Yeah. Huh. So it could fall, and it's still a decent drop. That'll still be like a 3% drop or something, and then it'll find support short term maybe for this week. This is a daily chart, by the way. This is when a pullback turns into a correction. If it breaks below the channel, breaks below the 38.2 fib retracement right here on the right? So it breaks below this support basically. So here's the channel and then 38.2. If it falls below that, then it turns into a decent sized correction. And then it could find support at 61.8 fib retracement, which would take you all the way down to like 2,600 on the S&P 500. And then the Fed's going to step in and they'll get the market going back up. So that's what I'm thinking right now. But, you know, a correction would take a little bit longer. It'd take us probably another month or something, 6 weeks at the most. Q2 earnings, right? But this is kind of like sell before Q2 earnings. And then when Q2 earnings come out, the Fed steps in. Q2 earnings are really bad. And then everyone buys the dip again. Because the Fed steps in. And maybe the Fed will actually buy stocks and buy the dip. You guys understand what I'm saying? Alright. But for the short term, a little more selling, maybe another 500,000 point drop. And then for, my trades, I'm going to take profits. Here's the FANG index. And here's another reason why I think there's more selling to come. Well, this ad situation that's going on and the fact that it's super overvalued and PE ratios are through the roof and fundamentals are just completely ignored, and for some reason people think tech stocks are safe havens, or people are out of their minds. It's like another dot-com bubble. There's more selling to come on the FANG index and the NASDAQ. All right. These did hit all-time highs this year, while half the people in the country lost their jobs and small businesses went under and record debt and just unbelievable stuff going on. At least it has to at least pull back or correct to the 61.8. I'm hoping the 61.8. That only will test on the daily, the 100-day moving average. Preferably the 200-day moving average should be tested, which would be perfect for the NASDAQ. It would take it to the 61.8 Fib retracement, right? And it'll find major support around 8,800 on the NASDAQ, because it'll hit the 100-day and the 200-day moving average, and then, the Fed steps in, we see a huge bounce. For the FANG index, which has been really going higher, 200-day moving average will be around the 50 Fib retracement. But honestly, I think they will backstop it before it could even test the 200-day moving average, which would take you on the FANG index, the 61.8, which would take you to 3,550, somewhere around there. So, give or take 50, 100, points. It's never going to be exact. It's going to be quick, too. All right. Russell 2000, the weakest indice. By the way, I shorted this. The short's doing great. I shorted right up here around my blue equilibrium line. It rejected the price. It also gave me a heads up on the pullback correction that started last week. And that's why for 2 weeks I've been making videos warning, I think there's going to be a pullback or a correction. I still don't know if it's going to be a pullback or correction. I think it's going to be a correction. It's just short term. It's not going to fall in a straight line. It might tomorrow. I don't know. I just know the direction of the price. And timing it, it's never perfect. You really do have to take it day by day. Because you don't know how jittery Mnuchin, Powell, Trump, and what's his name? Kudlow is. Alright, what else? Transports, Dow Jones Transports, really weak. It's about to actually test. It's broke below the 50 retracement here, and super weak. So another negative for the markets. All right, financials was a good canary in the coal mine type indicator to look at for the broader markets, to discredit the V-shaped recovery and to short the market and to get out. Look how weak they are. Look how close they are to their lows of March, when everything kind of crashed, right? Financials crashed, guys, compared to the rest of the markets. So let's look at the S&P 500 financials. It goes from 2013 to the current. Look how much it's dropped. So if we take a ruler from its bottom, okay, I did that wrong. From its all-time high, it crashed 43%. And right now, it's only Since it's like inception, it's only up 80% since like 2013. So financials are really weak. Despite all of the repo and the liquidity injections and everything, right? Another thing I'm looking at is Apple and here's Amazon. I mean, they haven't even begun to pull back or correct. So when these two fall, they take the market with them. So does Facebook and Googly. Okay, guys, think about it. I'm on their platform. So I don't want to say certain names. Um, that's also why they started censoring. Um, Huge drops because of ad revenue, right? So these two are monstrosities. They're part of that FANG index, and the FANG pulls up. It's the tide that pulls up all ships in all the equity markets, right? And I see more downside on these, at least for the short term. So because it already broke below the 23.6 fib retracement on both, I mean, they're probably going to go test the 100 or the 200-day moving averages. So a little more downside. It would probably be good if it just fell for the next 2 days, these two. And then I'm going to take profits on my short positions. By the way, when I go short, I personally buy long inverse ETFs that are leveraged, and I use options. So when you get moves like these, they go up hundreds of percent, my trades. Of course, I never trade more than 1% of my entire worth or value of my portfolio, right? That's how professionals do it, so they don't blow themselves up. All right. I'm going to show you guys a few of my good trades. Why not? Here's WTI crude. It's dipping, but I think there's going to be more upside into the end of this year, and I'll talk about that, how it's related to gold. Here's E-mini light crude. It's been doing great. By the way, I mean, I bought this dip. I bought it down here. I bought some ETFs. I bought into the the third and fourth quarter. I'll take profits later this year on them. But I already took profits on shorter time frames. Actually, here they are. I took profits on this one right here, right at near the top. I see another buying opportunity. All right, but that's for private members. What is this? I thought I closed this one though. It's weird. Let's talk about a few of my trades. So I'm wearing a Thumbs Up Planet Fitness shirt right now, if you can see that. You get it for free when you join. Of course, I canceled that. By the way, so we shorted this right before the markets crashed back in March for the plague. And this was one of the best trades ever. One of the best shorts I've ever done. It was awesome. I put a put option on, and it made me a ton of money. I did it again right up here, just last week or a week before that. So far, so good. And right now, I'm looking to take profits. Or if it does actually break a little bit, breaks below $60, I'll let it run a little bit more, and then I'll take profits somewhere down here, right? Now, I'm not telling you to trade this. You might be late to the trade. This might be it, and then it just bounces. But I'm going to see what happens tomorrow on the open, and if we get a few more selling days, right? And also, there's fundamentals to think about as well. What if the news breaks that they lost 60% of their subscribers? Then, it's just going to drop like an anchor. So it's not just TA, guys. you got to pay attention to some of the news events for individual companies and fundamentals. And once their earnings come out, I mean, it also drop like an anchor, right? What was this? So yeah, I trade the volatility indexes. Um, and we caught this last one right before the markets crashed earlier this year, and you're looking at a nice 5, 6, 7x, depends when you got out. I got out a little early up here, but you know that's a nice. That was a nice 4 or 5x. That's and I bought call options, so it was really a 40x. All right. Let's talk about it. Let's talk about it. Here's GDX. I love showing you guys this because this chart gets me more excited than anything. Listen, when GDXJ, the junior ETF, breaks above $50, it's just gonna shoot straight up. When GDX breaks above $40, it's just gonna shoot straight up, and they're going to catch up with the price of gold. If gold breaks out this week and actually gets above 1800 and stays above it, I mean, we might get those explosive moves. Oh yeah, now here's GDXJ, right? Look, this is a bottoming pattern right here. Bottoming pattern. I mean, any day now, any week now, it's gonna break above $50 and just do a straight moonshot. And I don't know how high, because if gold and silver, if silver breaks out above 20 and gold actually like makes a new all-time high like in the next few weeks or months, I mean, this will just keep going and going and going. So this is like a cup and handle. And the fundamentals, I mean, when the quarterly earnings come out for these mining companies, they're going to be the best on the entire stock market. So people cannot keep ignoring them. And I'm telling you guys, I'm really excited about this summer, especially heading into an elect season, right? Election season. Things are probably going to get a little wilder. They probably are. So people are going to get more nervous. They're going to look to protect their wealth and, hunker down, prep for the end. I don't know. And also, if there's another wave or another lockdown, I mean, you're going to see shortages again. And if you actually go look, I mean, the real price, like an ounce of silver is selling for $25 an ounce on the real market, and gold's above 2,000. So the manipulation might break, and we could see a limit up on futures, and it could be like over the weekend. It could be any day. I don't know. I'm excited, guys. So let's just do a little more TA on gold and silver here. Oh yeah, here's a bunch of ETFs. There's Let's look at GDXJ. They all look like this right now on the daily chart. This is a bull flag, and I love bull flags. They work out more than the odds of a bull flag breaking out is very, very high. I'd give it like a 70, if not more. And sometimes the flag part gets a little longer than it should, but when it breaks out, it breaks out. So, boom. And the mining stocks are gonna break out, because if the ETFs all have bull flags and institutions mainly buy ETFs because they're liquid and they're easy to get into, then all of the individual stocks are going to rise, right? Because individual stock shares are inside the ETFs. The ETFs buy the individual stock. All right. Way over an hour. I'm going to cut it right before I get to an hour. There's a bull flag on gold on the daily. All right, guys. And it already broke out. This bull flag was from weeks ago that I've been telling you guys. See how this bull flag broke out on gold? Right here? Well, we have another one. It's about to break out. We had another one right here. This was also a bull flag. And I'm telling you, I mean, if it could get above 1800 and just stay up there and not break below it, I mean, sky, like, there's really not much. There isn't any resistance above it, really. It's just going to keep running and running. So I'm excited, guys. Go to my website. Take advantage of that 20% off. It ends this week. And cheapest, I mean, for what I do, it's the cheapest you'll ever find. I just undercut everyone out there. I don't care. I'm a one person, one stop shop, right? Like I could afford to do that. Plus my portfolio, like I'm doing really well in the markets, and I could do it. So take advantage of that. Smash some likes. Please share my videos. It's the only way my channel grows, and I'll continue to do this. And leave anything in the comment section. I go through it. I read them all, and I'll comment. Unless you say something dumb, or you did something dumb in the past, and now I don't see your comments. All right, guys. I feel like I'm leaving something important out. Probably. Now it'll come back to me once I'm later today. Oh yeah. This is it. I should have said this in the beginning. If you're new and you're in the private group, the Patreon group is not the private group. That's just for payments. That's where you need to respond to my message I sent you with the information I need to add you to the private groups. The private groups on Telegram, there's four private channels for you guys, all right? Watch the intro videos once you join the private group. Well, once you join Patreon, there's an intro video there. You have to watch that. And you have to reply to my message because there's a few of you who just joined and you're not in the private group. I don't know what to tell you guys. Like, follow directions. I mean, directions are pretty simple. It's like 4 sentences. So and if you can't do that, then you probably shouldn't be investing or trading. All right. That's all I got to say.